And for more on how the trade war is affecting the markets, we're joined by Todd, Bubba Horwitz of Bubba Trading, and founder of and CEO of Three Bridges Financial, Tom Gandolfi. Thanks you both for joining us. Now, Tom,
Thanks for a great day.
Tom, it seems like people are sort of speculating, assuming that this Huawei move is just about leverage in the trade fight. China seems to have, on their side, found another pressure point, a leveraging point. They're the world's largest supplier of rare earth minerals, accounting for 90% of global production, and the U.S. relies on 80% of their imports of those rare earth metals coming from China. Obviously, very important to high-tech industries, electric vehicles, wind, cell phones, and the Trump administration notably did not include these materials on the latest list of tariff targets due to that reliance. So how big of a point is this for China, showing that they can squeeze outside customers, foreign customers, on this critical input in the tech industry? What do you make of the situation, and who's going to lose out if these tensions escalate?
Well, like most everything else that's related to the trade war, everyone's going to lose out eventually in some capacity in the trade war. And until we get a resolution that's beneficial to both sides, there's going to be a little bit of give and take for sure. Rare earth minerals are certainly very important to our tech industry. And while it's true that the Chinese are leading in production, there are a number of other countries that Trump has buddied up to recently that have significant stockpiles. Brazil is one. They've got the second largest stockpile in the world of rare earth minerals. India's got significant stockpile, as well as Australia. So certainly the Chinese are looking for some leverage, and the reason they're having to look for leverage is because ultimately the U.S. has the trade imbalance, and the U.S. is China's largest customer. That is the ultimate leverage, and that's what the Chinese are trying to counter, in my estimation.
Mm-hmm. And this question can go to either of you, but I'll direct it to Bubba for now, because you deal with global markets. Obviously, commodities are traded on a global basis, but people are speculating now that if you have a world where the largest Chinese tech manufacturer can't get U.S. components and U.S. makers can't sell them, that you'll have essentially an iron curtain, a two-internet world. Is that even possible in a world where commodities, all commodities imaginable, are traded all around the world? What would that world even look like, Bubba?
Well, I think when you look at it, I think it can go either way. I mean, it can be done separately or it can be done together. Now, again, I believe they're going to eventually work something out and do something together. However, if they don't, I think China ends up being the bigger loser. I think more of the things get developed out of this country, and of course, a lot of their stuff has been built on this ceiling of intellectual technologies. Now, you look at the commodities space, the only reason that commodities right now are priced lower than they have been in years is because of the oversupply. I mean, it's just a simple supply-demand curve. It really has not a lot to do with the tariffs or what's going on between the two countries. At the end of the day, between the two largest producers, between Brazil and between the United States, of soybeans, there has not been a crop disruption in 4 years. So we've continued to stockpile inventory. So no matter what product you have, no matter what trade wars are going on, there's going to be lower prices. And I think the trade wars right now have been just an excuse for the politicians and the lobbyists to try to push something through versus what's actually happening.
So Tom, I'm wondering how companies will actually make their choices in a post-Huawei ban scenario. We saw Google actually respond very quickly by cutting off its cooperation with Huawei on the Android operating system. But if the ban really is enacted by the U.S., and that's a very big question mark, what can U.S. companies do? What will Huawei do to adjust to the new scenario? There are a lot of reports right now that are saying that Huawei has already been planning for life after Google by tailoring their app gallery as an alternative to Google's Play Store, to take one for example.
You know, I agree with what's already been said. You know, the Chinese have a lot to lose here, as does the U.S. Certainly as it comes to trade bans and all the saber rattling that we're hearing here, a lot of it is political positioning, in my opinion, and it's political positioning in an effort to ultimately get a deal. Both sides need a deal. Certainly if Huawei sort of goes it alone and embarks on some of their own R&D developments and some of their own production and cuts out the U.S. companies, we're going to feel a pinch here. Certainly some of the bigger companies, Qualcomm is one that's felt it over the last few days as the news has broke, that are going to struggle somewhat. Corning is another that could have some problems. But ultimately, Huawei needs customers. And the U.S. is the largest market in the world. So sooner or later, I think business and government will both find a way to make this work. We do have a problem here that really is sort of hanging over the entire situation, in that we have systematic differences between the U.S. and China. The Chinese have a state-run, state-dominated economy. So their companies are actually heavily influenced or directed or owned by Chinese government. In the U.S., we have private business. So certainly there are some different interests in mind here, but the U.S. is taking the steps that it needs to, they feel that they need to take to protect the interests of the country. And the Chinese are doing the same for themselves.
And Bubba, on the back of that, Chinese right now is also being defensive. They're becoming increasingly less reliant on U.S. imports, turning instead to Brazil to fulfill its soybean demand. An estimated 5.5 million tons of soybeans traded over the past few days, boosting premiums to more than double the levels seen earlier this month. So China right now is sending a clear message that it doesn't need the U.S. But what about vice versa? Can the U.S. easily find necessary imports elsewhere?
The U.S. can do fine without China. China, you know, I've been doing this for 40 years, and whenever there was a problem with soybeans and price, the Chinese are buying. If they don't buy, there's plenty of customers. You know, one thing we have to remember is the population of the world continues to grow. There's a need for food. There's a need for soybeans. There's a need for corn. There's a need for wheat. And again, but as I said earlier, the one biggest problem right now is there has been no supply disruption in over 4 years that has created dramatic supply. The minute that starts to dwindle down, all of a sudden the price demand will go higher. And believe me, China's going to have to buy U.S. beans, whether they buy them through Argentina, whether they buy them through Brazil, whether they buy them through somebody else. They're going to need U.S. soybeans and U.S. grain products because, again, there's only so much supply. This isn't an unlimited supply, and when the supply runs down and they can't buy from somebody else, they're going to have to come to us. No matter how they get them, they will find a way. And I know they've already bought some through the back door to begin with.
So Tom, right now, today, looking at the relief rally, it seems so temporary, and because right now, as we said, this is only a temporary 90-day grace period that these U.S. tech companies have before they start winding down their operations with Huawei. Now, it really does seem like the Trump administration is just playing a little cat and mouse game with the markets. What do you think of this relief rally?
I don't really think it's a cat and mouse game. I think that the Trump administration ultimately wants a deal with China. And they're trying to do what they think that they can do to kick the can down the road just a little bit. You know, Trump's going to be meeting with Xi in about 30 days at the G20. I'm sure they'll have some dialogue and some conversation. I think that both sides absolutely recognize that something's got to get done. And, you know, both the U.S. and China are rattling whatever cages they can. China doesn't have as many cages to rattle. And that's the cold reality here. Bubba mentioned the soybean supply. He's absolutely right. There are plenty of customers.
Right.
China needs the U.S., and ultimately they're going to have to figure out a way to come to grips with the fact that they've got to do business with us. And we need them as well. Don't get me wrong. This isn't a one-sided affair, but a deal's got to get done, and China recognizes that.
Right. It's a real big interest for both sides to settle this. Tom Gandolfi of Three Bridges Financial and Todd Bubba Horwitz of Bubba Trading. Thank you both very much for your time.
Thank you.
Thanks for having me.